Hey guys, it's August 28th, and this is a recap on oil. 300 tick move yesterday, guys. And I talked about how the market's going to start trending more often after last Monday's sell-off in the stock market and volatility kind of coming back into the market. And just to be upfront, I did not make $30,000 yesterday. However, there was a potential to make that much money. And it was just one of those days where I just decided not to trade and I missed out. And I'm looking back now and I'm seeing the huge swing in the market. And the bottom line though is that there's still going to be opportunities in the market. And this is the kind of stuff I was talking about where because there's more trend days that's going to be happening. These are kind of opportunities that will present itself, and you can make lots of money on days like this because the reward to risk is huge. And I'm going to go over the details of that trade in just 1 second. Alright guys, so before we get into the trade for Thursday, I'm going to give you guys some context on what happened from Monday, and that'll kind of give you a better idea, an introduction into how we could have traded Thursday's oil move. So we started off Monday in a downtrend, and we kind of got chopped around in the US market. We ended up down, okay? Then we came back up into this zone right here, and then we just kind of ranged back and forth in this area, right? So we have your highs and your lows right here, and you can mark them using your market profile levels. And I kind of grayed out the top and bottom of the zones here with these extensions that really don't really matter. You got to look at where it consolidates the most. So these are my support and resistance zones that I kind of drew in beforehand. And basically the context was this. We had this range, and as I always talk about, when you're ranging in a sideways movement for a long time, and this was over a 2-day period after a big drop, right? The bias was to the downside, right? Oil's been dropping for quite a while. And then, you know, I don't usually talk about news here, but the news was really talking about how not only Saudi Arabia, but everyone in the world, including a lot of industries that are tied to the US, if the barrel of oil stays under 40, and as you can see, we just dropped under 40, that a lot of panic in the market, meaning if we stay under $40 a barrel, that there's going to be a huge impact in the industries and Saudi Arabia, and including these countries that produce oil, that they won't be making as much money, or eventually that they'll run out of money because they cannot sustain a $40 per barrel production cost. It just won't pay for the amount of cost to drill and pull the oil out of the ground. So there's a lot of skepticism. There's a lot of hype around that news and the $40 price range, right? So we just broke under 40, and we were kind of ranging sideways. So this was kind of the inflection point at this point. And then Wednesday, we had inventories come out. It was actually a bullish number, and meaning the price should have went up. And instead, we shot up for a second, came up to this resistance area, as you can see, and then shot right through the downside into the support area, and then kind of ranged and then fell down, but then came back up and settled near the lows, right, at the end of Wednesday. So the trade idea was either a breakout to the upside and buy, or a break to the downside and sell, and we really didn't get a whole lot of movement. You know, we just kind of chopped up in between there off that Wednesday news. So there's a lot of tension now in between these prices. So now we really are looking for price to either break out to one side or the other. So moving to the right, we start the Thursday pre-market, and you see the price kind of start slowly rising. So now we're in an uptrend. Let me pull back a little bit real quick. So now we're in an uptrend, right? So we're looking again still for this breakout of this area, and you have your reference point right here, and I'll take this out finally, where you have the market profile at 39.63 as your reference, and then you got the 73. But your more important inflection point is going to be your 63, because you can tell right here there's a lot of bouncing up and down into this area and holding below this level. And even on Wednesday when it spiked, it went up to the 63 level and then shot immediately back down. never really reached the 72.73. I mean, that was only 10 ticks away, but that's why I kind of put that little zone in place. But really, your initial price that you were looking at to break and hold above would have been that 39.63. So with that reference in mind, now we're going into the pre-market and everything's moving back up, right? Instead of breaking down, right, we're now moving up. Okay, and all of a sudden we see a price break, and I don't know, for some reason TD Ameritrade has a gap in here, so that's why I have the Ninja Trader chart open for you guys that I'll talk about. And then it just shoots up with a lot of volatility to the upside, and that was, you know, from the lows here, and once it broke the 63, nearly 10, 20, 30, 40, 50, 60, 70 ticks, you know, a matter of 5 minutes or so, 50 to 60 ticks, and that's huge. You know, there's a lot of buyers in that move, and not only that, it held up here. So what you're doing now is, at that point, what did I say? We look at this area right here and we say, okay, well, if it comes back down, we'll buy. And let me go into the micro, we'll go into more detail. So 63 being the reference point where we broke out of, right? And you cannot see here, but I'll show you the details of where you actually could have bought here. Because if I move over to the right, you're thinking, all right, it never actually comes back down to the 63. It comes back down as low as 39.8, almost twice, and then it really takes off, and then you see your 300 plus tick move all the way to the top. So I'll talk about the two different entries that you could have done there. So the first one, and you have to pay attention, would have been pre-market, right? And here we are. So same context, we finally broke down into the $40 area, and then we start consolidating, right? So this was Monday and Wednesday going into Thursday. We got the chop up and down on Wednesday, and here we are Thursday. Okay, let me zoom in real quick. Okay, and the blue line right here is the 39.63, and that was a market profile level. And let me show you how powerful these levels are and breakout retest. So we talked about how important it was for this number to be an inflection point and this resistance zone to be broken out of, and once it does, it'll go to one side or the other, right? Because of the range. All right, and here we are. We just broke out of the 63, right? Watch it go up, goes up to 39.8, holds above the 63, and comes back. And now we're waiting for it to come and retrace back down to 63 to buy, right? There it is, right there. This candle bar right here came down, hit exactly the 39.63 where we broke out of, which was a market profile level. And check out what happens next. 13 tick stop below here, right? 53, 52, 51, 50 would have been your stop. Wow, look at that candle bar right after it hits the 63. And market's moving fast these days, and that's the volatility I talked about. Kind of comes down to the 66, and that was the last chance you had to get in, and then you get your 10, 20, 30, 40, 50 tick move right there. Barely comes back down, retraces, and then pretty much takes off after that, right? So you're able to take a quick profit off of that move, and we keep moving higher, and you can see the moving averages are super strong, right? So the next question is, if I missed that move, where do I get in? Well, this is where we would have gotten in, right around this 80 level, and you'll see it come back down twice to 39.80, and I'll show you real quickly how we could have done that. So we missed this move here, and I already have it on Thinkorswim, but let me try it on here as well. At that point, you just do a Fibonacci. Okay, you look at your lows where it actually took off, right, when it finally broke off that level, and you come up here to the highs right here. You go ahead and change my template to my Fibonacci levels. And the levels that you're always going to look at is the 62 to 76% retracement. Now, because of this huge up move, you know, the potential to come back to 76 might not be as strong. But look where it actually comes back down to 62%. Comes back down to 62%, and that's where you could have bought again. And you got to look at the price action now. And look at the 62%, 39.80. It's just amazing how it just works out that way. As soon as it comes back to the level, you see how bullish the market is. Meaning there's a lot of support here. Because look where the price actually launched up at. Pretty much at the 39.80 level. And it comes back down. Tests it one more time at the 39.81. One tick away. And then that's when we just take off. Alright? So we had two chances to get in the market for a 300 plus tick move off of that. And because of the tension, because like I said, in a sideways market, in a balanced market, when you break out, it's going to really show volatility. And in this case, because of everything that's going on with oil and the $40 level, you got to look at it. Look at where it was at the 39.80, 20 ticks away from that $40. Once it breaks out of the $40, it just takes off, right? Because everybody that was shorting the oil probably in a bad position at that point. And whoever wants or the incentive for oil to be back above $40 really took control and never look back. And we are now actually this morning at a high of 43.50, right? So it went from under $40 a barrel to almost a $3 move, and that's insane. Now, where else could we have gotten in? Well, show you real quickly. You have the next high up here, never came back to retrace. So you look at the next low and inflection point. Take the lows to the highs. This actually comes back down between the 50 and 62%, goes up. If you miss that move, you just take another leg, because these are going to be steps along the way as it goes. And this was really your final move right here. We got your low and your high. Comes back down to 76% retracement. You see the immediate bullish move off of here. Consolidation, holds, and that would have been your signal right there. So even if you got in a little bit above here between 76 and 62% retracement on the price, had your 13 tick stop below here, and you never would have been stopped out. But this is really confirmation, because you don't know if this thing's going to just fall apart on you, but it comes back to that 76% retracement. This price structure right here is holding, as you can see, right? Because it jumped up, came down, showed support, finally shot up to the upside, right? And you see the bullish candle bar here and the real one right here that launches at the 41.95. And it comes back into that level again, and it should hold. And it shows it held, and pretty much wherever you put your stop at one of these entries at the either 76 or even at the 62% retracement, after you had the signal, it never looked back. So you would have plenty of room even with your stops between at 13 to 15 ticks for this thing to move back up. And we moved 20, 40, 60, almost 80 points, 80 ticks just off of that move alone. And then the rest of the day we just kept drifting up. And if you missed the move, you missed the move. But that was really the end of the day on Thursday. And then now we just had another bullish move. And as you can see, I drew in another Fibonacci here as we're still in an uptrend. And here was our lows. Range high as soon as you see that bullish move, right? Came back down to the 62% retracement right now. And this would have been a buy right here with a 13 tick stop to see this go all the way back up to the 43s. So at this point though, we could be ranging. We had a really big bullish movement, so we gotta look and see if this thing can really just continue pushing up. So we'll let the price structure kind of just build today. But this could have been your first your trade of the day, as it came back and retraced deep into the 62% retracement after this bullish move. And you can see it's really the top of where the highs of yesterday. So if the high of yesterday wants to hold, and this high or this 62% retracement lines up, it should hold right here. If it doesn't and it fails, then we will look for this thing to either balance in between here, break down below the high of yesterday, below the low of today so far, and then we'll look for this thing to come back up, retrace, and then we can sell using the market profile levels that we'll establish today. Let me go ahead and remove all these drawings so you guys can see that. So we have the low value area right here for today. If this thing doesn't push up off this and we get a lower value into this range, we're going to have to really see this thing break down, come back up, and then we can sell into the market here. But with this bullish movement here, not really looking for this thing to really pull back a whole lot. And every test of these market profile levels as we go back down are potential areas that it could bounce as well. So, and just to illustrate on the Thinkorswim, you guys can see the kind of like the market or the price structure here, like I said, that led up to the Wednesday. And you got your market profile levels right here at the 63. And as you can see, as soon as it broke through it, came back down, retested it, and shot up and stayed right above here. And the 73, 74 was your next level to really for price to kind of hold above. Let me draw this in real quick. And you can see that obviously it held right here, never came down to it, and the price just moved continually after that. Where you could have taken price, now exits could have looked at the top of this range over here, right? And actually I have the drawings already put in, so let me go ahead and show the drawings. So you have your line here, your market profile levels here as it came up, and you can see that once it came through it, came back down and bounced above this level and continued up higher from there. And even older market profile levels, as you can see, if it breaks above it, you can use that as reference points. If you're in an uptrend, in this case, use a high value area to bounce and buy off of this, and could have made some money right there. Your other targets really was this range here, and you look at the market profile levels here. The first one would have been the 42.14, and then the bottom of the range here, which was a 34 to 43. So let's go back to the right, and you guys can see what happened once price got to that level. Hit the 42.14, actually went all the way up to the 34, and then started coming back down from there, right? Broke through the 43, so you would have been able to maximize your ticks as it came up and broke through these levels as targets above here. And then your next targets would have been the consolidation here in the middle of the zone at the 82 to 92, and then your next level would have been right at the high of this resistance area at the 43.3. And let's look at price and what it did here. Let me see, take away some of this. Okay, 82, 92. At the end of the day, look what came up to the 82. Go back to reference the highs here. So you had the 82 right here, right, that I talked about. And you can see there's quite a lot of confluence here with market profile levels. I'll move this. See right there where they just keep lining up. You see a lot of confluence there. So use that as a reference point to exit. And that would have been your best exit, really. Would have been that 82 level. And you can see it actually came right up into there at the end of the day. And actually it's holding right now too. So all these are nice references to kind of use, right, as areas of support and resistance. So that was an amazing day. Look for more trend days like this. There will continue to be opportunities in the market, so don't worry about missing out on a 300 tick move. This is an anomaly. This kind of move rarely happens. I think the last time we had a move anywhere close to this was back in 2009. So this kind of stuff doesn't happen every day, but don't worry about trying to make a 300 tick move every day. You know, you can lock in 50 to 80 ticks and still make lots of money in the market every day, over and over again. And trending days, like I said, you're gonna make at least 100 ticks off of these moves. And but understanding the context does help out. But the technical aspect of it is still, we're looking at breakouts, right? And after consolidation area, if it breaks out of that area, there's strong movement to the other side. And same thing you can see here. This sideways movement here was about 3 days spanning before it broke down. And when we broke out above it, look what happened. We broke out above it, came down, and look at the lows here where that red candle bar is, right? Right here. Look to the left. And it actually came back up to the highs here and held, right? And the market profile level here at the 75 and held, and it just kept going up from there. So you can see once it broke out of here, never really looked back, because the structure should have held, but it didn't. And now we're in this zone right here. So we'll look for this thing to kind of break out of here to see if this thing can continue moving up into the next levels. But there's a lot of consolidation, a lot of resistance above here, so it may just kind of balance up and down in the next couple of days to weeks. But this one day really took out a lot of shorts as it went up. So we'll see what happens in the market, guys. This is just one day on a Thursday in August. August is behind us now. And let me show you one last thing. So one thing you can also look at as far as understanding how much volatility is in the market is you can look at implied volatility. And this is really using the options market. So a lot of options traders will look at volatility and say, okay, well, how much implied volatility is in the market, meaning what can I forecast as far as price moving towards as far as a maximum amount. And right now we're in the October contracts, and in Thinkorswim you can go to the trade tab, put in the symbol that you want to look at. I put in CL, which is the crude oil that we trade, and we looked at the October contracts. We got 21 days left, and you look over here at plus or minus 3.944, and within that amount of time, the implied volatility is this thing can move up to $4. And as you can see, we have already moved within just this day alone about a $3 range, over a $3 range. So this thing is pretty accurate, pretty good way of letting you know how much price movement can happen within a matter of days to weeks, right? So we look at this day to day or week to week to kind of give us an idea of how much potential these things can kind of move, right? And as we start counting down, this thing could go up and down, and that'll kind of give you an idea of how much volatility is in the market. I think the other day it was a lot higher, and now it came back down after the move. But $4 is still a lot for oil. So we'll see what happens. But that's another thing that you guys can look at and use as a reference. And so far it looks like this area, this price structure is holding. This high value area right here is holding. So we'll see this thing kind of move up. If it doesn't get stopped us out, like I said, we'll look for this thing to either break to the downside or balance in this area, and we can buy and sell as we kind of balance. And that'll be our Friday trade. Alright guys, hope that you guys were able to capture some of that. I know there's a lot of terminology, a lot of lines and technical analysis that I went through, but it's all basically the same stuff. Main thing was looking at the accuracy of the market profile level, and the fact that once we broke out of it, came back up, tested it, and that was your buy. And literally in this instance, it was to the tick, and it moved so fast. Because of volatility like this, you have to be aggressive. You have to just get in the trade. You already know your defined risk. You already know your minimum risk is gonna be 13 to 15 ticks to lose, so $130 to $150 per contract to lose. But look how much money you're gonna make on the way up, right? So just keep that in mind in an environment like this, because it doesn't really last. But when it happens, you can make a lot of money on that reward to risk, and that's what you have to focus on, is a reward to risk. Okay, guys. With that said, I'll close out the video, and we'll talk to you guys soon. Leave a comment and ask any questions as we learn this together, guys. You can email me at nightlydaytrader@gmail.com. My name is Joseph, and I will talk to you next week probably. Alright, guys. Talk to you soon.